All right, guys. So today we're going to be going over some risk management and basically, a little short class about risk management. A lot of you guys actually, you starting to understand charts, you're starting to understand trading, but you just can't seem to have consistent wins. Like you'll win, and then when you take a loss, your loss is still equivalent, if not more, than your winners. And overall, you just keep losing. So that's what this class is for. Um, just to have the best energy. No, for sure. They gonna see. So that's pretty much the problem. A lot of people don't know this though. Like they think that the win percentage matters, but that doesn't. Like if you have the right risk management plan, then you will make a decent living. Like I know traders that are literally their win percentage. Like this is facts. Like this is real. Like I have traders that win percentage is like in the 40s, but they're still profitable. They're still growing their account. They're still making money. They're still trading for a living. They're still traveling, and their win percentage is only like 40%. And why is this? It's because their risk management allows them to be profitable. So to go from there. All right. So why is risk management important? Let me move this real quick. Oh, this is in the way. All right. So why risk management is important? Managing your risk allows you to stay in the game longer. That's literally the whole goal of trading, right? We traded, we want to trade for a living. With the proper risk management, you stay in the game longer. It's that simple, right? If you keep blowing your accounts, keep taking losses, you know, not only are you going to stop trading because of your money, but also just because, who want to keep trading and they keep losing money, right? So this is the whole goal. Your number one goal as a trader is to protect your capital. Not Jay can't protect your capital, Isaac, Asha, Shine. We can't protect your capital. Only you can protect your capital, right? And that's how it's supposed to be, right? You're supposed to be able to protect your own capital. It's your money, and I'm not getting a percentage of your profit. So why are you know what I'm saying? Y'all get what I'm saying. I ain't gotta explain that too much. But yeah, that's your number one goal as a trader is to protect your capital. Understand that no trade is 100% guaranteed. So every trade that you take, you will face risk losing money. And this is facts, guys. I don't, people get into trading and they try to find, the best Discord where they don't take losses. Or, I have a friend that literally started right when I started, back when my account was about $2,000. I had a friend that I was getting into trading with, we were supposed to get into it together. And, we got into it, we started losing money, blew an account or whatever. And I mean, he literally was just like, I'm not coming back to trading until I can find a way where I don't lose. Like this is exact words to me. Like was his exact words to me was he's not coming back to trading until he finds a strategy that he won't lose any money. And here we go, 2 years later. I'm not trying to, he's not on here. He's not on here. But 2 years later, he's working at U-Haul right now, making $12.50 an hour. I'm like, so serious. He gonna be here in a minute. Still a homeboy, still love him or whatever. But we started at the same time. So if we were doing it together, he will be literally where I'm at right now. So, it doesn't work, right? It doesn't work. So, it is what it is. Um, so next is, even with a high winning percentage, without the proper risk management, you will end up blowing your account. This is facts. A lot of people don't understand this. Let's say that you're a trader, because some of you guys actually be having some decent wins. Um, some of you guys actually be having decent wins, but your risk management sucks. So like next trade that you take, you risk blowing your account. How many of you guys have actually had a nice win and then you lost all your money? How many of you guys actually grew an account pretty high and you blew it again, right? Just let me know every week. Oh, wow. That every week, that is, you a strong one right there. Did it today, and this is facts, right? A lot of people, for the people that's watching this recording, everybody is pretty much just saying, yeah. So slowly raise my hand. So yeah, that's the truth, guys. That is the truth. Blew my account today. Oh wow, today was a pretty good day. This week was honestly the first week I felt I really protected my capital. Yeah. All right. So cool. So basically, a lot of people are saying that they did it right, and I keep telling people this. It's because of the proper risk management, right? You blow you get a nice win, or you finally grow your account, and the next trade or the next couple of trades, you blow your account. And I'm gonna give y'all some game on what actually happens. So what happens is Normally you gap your account up. So you start sizing heavier because you want to make more money. You start telling yourself, hey, this play just went 100%. So, maybe if I put my whole account in 100%, then my account can be doubled, right? That is not realistic, guys. That is not realistic trading. If you plan on trading long, you have to understand that that is not realistic. I trade with a six-figure account, guys. I wish I can put the whole account into one trade and make it work. It just does not work like that. It doesn't. No trade is 100%. So you guys have to start managing your risk, right? You have to get this in your head that you have to, right? You have to manage your risk. So, it's just how the game goes. Account went from 1,600 to 5,000 today. Going to take. Yeah. So, and I'm gonna give y'all some game when it comes to risk management before we get into the actual strategies and stuff that you can use. So one of the things that I've did that, and I'm telling you guys, this is from time, right? I'm telling you guys this because I wish somebody told me this when I first started trading. And not everybody can do this, but if you have a bigger account, guys, take money out and put it in your bank account. And the reason why I'm telling people this is because the money don't feel real, number one, unless it's in your bank account. And then also, some of you guys just can't handle a big account right now. And that's totally fine. That is totally fine. Not everybody can handle a $5,000 account, a $10,000 account, a $20,000 account. So by you taking your money out and resetting it back at that number, that teaches discipline. That eliminates FOMO, right? That eliminates all of that. And that's one of the things that it helped me personally grow my account because I was doing that, right? I would start taking money out. At the time, I remember when I first touched 100K, I just could not, it was so hard to like really pass 100K because I just kept wanting to, once I hit that number, I kept wanting to get to 200K, really a million, honestly. When you see $100,000 in your account, the next level is a million, right? So I kept just trying to get rich quick. I kept doing these things. I didn't want to really take money out. And I just left so much money on the table that could have been in my bank account, right? And it's because I had to learn how to manage a bigger account. So the reason why I'm telling you this is a lot of people, the problem with trading isn't making the money, it's keeping the money. That's the number one problem. It's actually, if we're being honest, it's actually not that hard to make money in the market. It's hard keeping it. So that is where you have to change your mindset on the way you look at, your money, right? The way you look at trading. You want to come in from a mindset that like, okay, I got this money. Now, how am I going to keep it, right? And one of the other things that I tell my mentees is, you actually make more money trading less. Now, I know this kind of weird to y'all, I call a lot of plays in the chat. Everybody know that, it ain't no secret. I call a lot of plays. That's just what I do. The main reason why I do it is normally because, everybody don't catch my plays. So, I try to get them opportunities. So for the people that's like, Jay, you called so many plays, if you're a person that just made some money, it's okay to say, all right, I'm done for the day. And people don't think that though, everybody want to make these big old gains, but they don't know how to really manage it. So that's what I'm saying. If you want to, one of the things that I like recommending is if you have an account right now that's over $1,000, but you just can't seem to keep it growing after $1,000, maybe every time that you get paid on top of that 1,000, you should go ahead and withdraw it and just keep doing it that way until you officially can be able to handle more size. Because like I said, everybody not ready for that yet. Everybody is not ready for it. And if you're a person like me in the beginning that just kept blowing $1,000 accounts, maybe it's time to lower that size. And the reason why you lowering the size is simply because you're teaching yourself consistency and risk management. So that's number one. And then this is one of the major things. You cannot avoid losses, but you can avoid big losses. The key to trading long-term is to minimize losses. And this is facts. This is facts. You literally cannot avoid losses, but you can. I'm telling you right now, you can avoid big losses. And I'm actually glad that we did the risk management class today because one of the trades that we took today, you've seen the risk management actually be, actually into play, right? So today we took Airbnb, right? Airbnb, we lost 8% on that trade. And I literally, had people saying, like, I didn't say that just to say it. I literally had people DM me saying, Jay, why are you cutting so early? It's only down 8%. And I'm like, okay. Like, the root is my risk management, right? The way I trade, if the reason why I got in is no longer valid, I don't care what the percentage is. I'm just cutting the trade. It could have been 1%. if the reason why I'm not in is no longer valid, I'm cutting the trade, because why am I holding it now? If the reason why I got in that trade is no longer a reason anymore, there's literally no point for me to be in that trade at all. There's no point. So just cut the trade and move on. And like I was saying, be glad that it was only 8%. Y'all know how the trades go. Come on now. Y'all know how these trades be going, right? Hey, sometimes when you do that way, it'd be down 80, 60%, right? So be glad that it was only 8%, and it comes with discipline, especially when it comes to this risk management stuff. Is because even me, like it's an endless battle. Just because you start making more money, it's still an endless battle, guys, with your mind. It's not even really your, you know, your money or just the way you look at trading. It's really just like the mindset and the discipline that comes behind it, right? And it's going to be an endless battle, throughout your whole entire trading career. It's going to be an endless battle. Most of you guys don't understand this, but you taking losses because of your discipline, not because of your charts. If we just gonna put that out there. So if this makes sense so far. Yeah. Cool. Hold on, let me see. I got a new mouse today, guys, so bear with me. This one is kind of new, gotta break it in a little bit. I think a lot of the accounts that are small find it hard to cut because of limited buying power. All right, so put this way, and this is actually something that I get a lot of the times. So people that with a small account, they don't like to cut because of the limited buying power. I'm glad that you said that. Okay, so let's put this in perspective, and I'm not bashing nobody or anything. I'm just like, let's really put this in perspective, guys. So you got a small account, right? And you don't want to cut because I'm telling you, I don't know what it is, but this actually, I get that a lot. I literally get that a lot, Jay, especially with my mentees. Jay, I didn't cut because I'm already limited on buying power, so I can't really cut. So you mean to tell, let's just think common sense, guys. You mean to tell me you got a small account and you don't want to cut because you got limited buying power? So what happens if you just hold the trade and then it don't go your way and the loss get bigger? What buying power is you gonna have left? Let's just keep it real. What buying power is you gonna have left? You ain't gonna have no buying power really that time, right? So I'm just being honest. I ain't trying to bash nobody, but that's common sense to me. Like, if the trade don't go your way, you ain't gonna have no small account no more. You ain't gonna have no account. You're gonna be, hey, look, that's just me, right? I'm just putting it out there. That's just me. Myself on my punching for a little bit throughout the month. No, my bad. I didn't mean to. My bad. No, we ain't gonna talk about the old mouse. Question. So the next question is, do you cut losses based on percentage of the trade or the stock percentages? I never cut a trade based off the percentage or stock anything. The only thing that makes me cut a trade, and this is just the way I trade that allows me to do this, is I cut based off the charts, but understand the way I enter my trades, I'm not gonna put a percentage behind it, but the way I enter my trades, it's like, okay, let me show you an example real quick so I can show you kind of how I do it. So let me show right here. Let me share this screen real quick. All right, so I want y'all to see kind of, and my mentees will tell y'all about this. And, for the people that like do this work, just ask them, the way I trade, just ask them, they know. So let's go over, let's go over this trade, right? So this is Amazon puts. Let me move this out the way. Actually, let me just go to one screen. Time of sales, level 2. All right, let's get rid of this. So I'm gonna show you kind of how my trading strategy works a little bit when it comes to cutting losses, because I trade a certain way. All right, so this right here is a bear flag on Amazon, right? So I would have cut this trade, right? So let's say we entered on the bear flag break. Let's see, hold on, because I don't want to answer this. I took it on a bear flag break, and this is my 9 EMA. Can anybody tell me where would I cut this trade at? Let me know something. Let's see who can get it. Let's see who's gonna get it. There we go. All right, cool. Good stuff. So I'm taking this bear flag break on Amazon, right? I'm taking it here. Let me draw this triangle. Let me draw this little line right here. All right, and this is the daily time frame. We're literally this. I don't want nobody to feel some type of way about anything. Don't. I know this is the daily chart. I'm literally just showing you an example, guys. So don't be like, oh, this is a daily chart. That's a bigger loss or whatever. I'm just showing y'all an example. So let's say this orange line, right? So we taking it on the break here. It's breaking here. So that is where we entered because it broke here. It broke here. So we're entering it, right? So it is now invalidated if we close back above here. We never did. So to me, this trade is still valid, right? So it's no percentage to me. And this is how my risk to reward look, right? So if I'm going from right here, this is going to be my risk box right here. And it's going to make sense in a little minute. Hold on. Right? Let's make that red because red means no. That means a no-no. We took it on the break, right? So the red means a no-no. And the green is my price target, right? Because I say that it's going to go down to this level. This is my level, right? So my risk to reward looks a little bit like this, right? So as I'm taking this trade, as long as it doesn't come back into this red area and closes above that, it's just free game. I'm just riding the stock down to the next target. So I don't cut by percentages. Now, you know, and that's the way I took my trade. Now, if I took it in the middle of it, like coming down, which today we did, but it was a little different the way I took it. My stop loss was literally if we can close above the previous candle close right there. So when I took Amazon today, right here, hold on. And it's just the way I trade. I'm able to do stuff like this, right? So I don't have to have percentages because the way I trade, this allows me to capitalize bigger gains, right? If y'all notice, my winners are way bigger than my losses. And this is how I'm doing it. Because the way I structure my risk, I can be able to hold trades a little longer and just have a more clear. I ain't gonna lie, it does get hard sometimes, but overall, you know, it's just how I trade. So right here, you know, we taking Amazon. We know that our stop loss is above the previous candle's close. So this is the close right here of this candle. So if I'm taking this break here, it is invalidated if it can close above that previous candle's lows, right? So as literally, I'm just riding it down. So that's how, so I don't really have a percentage, you know, and that's kind of how I treat trading, right? If the chart's not telling me to get out, I'm not getting out, if that makes sense. But if you wanted to have a number, right? Because I know everybody don't trade like me. So if you want to have a number, you know, let's be realistic, right? You know, if you're saying your stop loss is at 30%, you have to understand that you're going to have to make a, you know, 40% trade to be able to make profit. So you have to kind of think from that way. So maybe 10% might be, but you have to understand, guys, you have to, if you're going to go by a percentage stop loss, you have to understand that your percentage stop loss, you have to get a nice entry. You have to be good with entries and exits, because if you have a 10% stop loss and you just, the reason why I'm saying this is because you can have a 10% stop loss, which is totally fine. Ain't nothing wrong with that. You can have a 10% stop loss, but then you're going to get stopped out because of the percentage and then see that the stock actually go your way. And the reason why is because your entries and exits were off. So that's why it's kind of important to understand charts. You know, a lot of people just get in these trades and like, well, if it goes dead negative 10%, I'm cutting. A lot of people don't understand that, right? A lot of people don't know how that works. So that's the reason why you want to more lean to like actually learn your entries and exits, right? That way your stop loss can be a lot more clear. Like any trade that I get in, and that's one of the things I'm gonna go over today. Whenever you're making your trading plan, you always want to know where you're going to cut this trade once you get in the trade. Like, let's be realistic. If you're taking a trade and you don't know where you're going to cut the trade at, you don't need to be in that trade. You don't need to be in that trade. If you do not know where you're going to cut that trade at, you don't need to know. I mean, you don't need to be in that trade. Next question. What is your thought process as it wicks up there? Somebody answer that for me. Mentees, you can answer this one. Why did I cut it if it wicked up there? Let me know. It did wick up there, and that's what I'm saying. I want y'all to tell me. They'll tell you. It never closed above. It never closed above. It never, there we go. Good job. So the reason why I didn't cut is because it never closed above the previous day. It can wick. You understand, wicks are not bad. Wicks are actually pretty good. That means they're rejecting that level. So that this level right here, this orange line, all that means is it's rejecting it. It never closed above, right? So this is where a lot of traders that don't know what they're doing, they get shooken out just to see the stock go their way, right? And that's simply because, it never closed above. Now, I will have somebody say, well, Jay, this is obviously the daily time frame. So what about if it closed above on the 5-minute? Can somebody tell me how I feel about the 5-minute? If you on a bigger time frame, how do I feel about the 5-minute, y'all? Leave it alone. Get out. And the reason why we're saying this is if you're not scalping, you're not doing any quick moves, then why do you there's no need for the 5-minute. And it is what, and I know, if you're not a mentee, I'm not trying to refer everything back to the mentees because I want everybody to learn. But the 5-minute, thank you. The 5-minute is too much noise. You have to, when you're trading, you have to block out the noise, guys. You want gains, you want bigger gains. I ain't saying nothing wrong with the 5-minute, but understand if you're a 5-minute, you're gonna get a 5-minute trader profits. Don't think that you about to get on the 5-minute and get a day trader profits. That's not how it works. Don't think that you about to be on the 5-minute and you about to get these 200% gains. You're not. You're going to get shooken out unless you got some premium diamond hands. And this is real, right? This is real. So if you see somebody like me or Asha that's able to make these bigger gains, these 500, we're not using the 5-minute, guys. And I keep telling y'all that we're not using the 5-minute, right? So you have to understand, if you want the longer trades where it's a little less stress, a little less noise, if you're a person that hate opposite candles, then you need to get off the 5-minute. You need to get off the 5-minute. Every trade that I've took this past 2 weeks has been off the 15-minute or the hourly or the bigger time frames. I have never, since we've been trading, I literally have not used the 5-minute. If we've been, honestly, I haven't used the 5-minute really all year. If we being honestly, I haven't used the 5-minute all year. So, and if we're going off of bigger accounts, let's say that you got a smaller account, right? Smaller accounts should really be on the bigger time frame so you can catch bigger moves. I mean, if you got a small account and you catching these little 15% gains, I mean, you ain't gonna be satisfied with that. And guess what? You're gonna go do? You're gonna overtrade and you're gonna blow your account. Just be honest. You got a smaller account. You need those bigger gains to grow your account. I mean, yeah, those 15% add up, but I mean, most small accounts not satisfied with that. That's not enough to them, right? But we're speaking from we're human, guys. We're not robots, right? We're trading. We want money. We want money. That's the whole goal. We want money. So if the 5-minute is your best friend, that's fine. You can use that, but it's definitely for a scalper. And it's hard to scalp if you got a smaller account because the gains are smaller. So if you want bigger gains, then why don't you go to a bigger time? I'm not saying swing. We all know how swinging is. We ain't all about, we all know how swinging is, right? It is ugly. Those are preferably the things that for small accounts is to swing. But overall, I ain't never used a 10, but I use a 15. But I say the 1 minute and the 5-minute, I leave those to scalpers. I don't manage my plays. Now, the only difference is, like Morgan just said, the only problem, because understand, there's no secret to trading, guys. There's no secret to trading. Anything that sounds good always comes with a, some type of, drawback. Trading off the bigger time frames, let's say that you're waiting for a bigger, you're on a bigger time frame. So obviously your stop loss is going to be close above on that time frame. So that means your loss might be a little bigger because you're waiting for that time frame. And what I tell my mentees is, depending on your risk management and depending on what you're okay with, if you want to, you can enter on a bigger time frame and you can watch it on the 5-minute. I'm being very transparent. You're going to get shooken out a lot, but you can be able to cut losses quicker than somebody that's on a bigger time frame, if that makes sense. So it's pros and cons, guys. It's definitely pros and cons when it comes to it. But I'm just like, me personally, those bigger gains that you see is because I'm using a bigger time frame. Just like put that in your mindset. Bigger time frame, bigger gains. That's kind of how you got to look at it, right? Bigger time frame, bigger gains. Smaller time frame, smaller gains, right? So, that's just kind of how it works. No, I do not chart on the 5 minute. You will never catch me charting on the 5 minute. That's why when I call a play and you guys get in the chat and y'all be like, Jay, it's this on the 5 minute. You never see me respond to that because I'm not on the 5 minute. I don't care what the 5 minute do, because guess what? Let's say that we're in calls and you see a bear flag on the 5 minute, but whole time on my hourly chart, that ain't nothing but maybe a candle might be wicking or something. And I want you guys to know like the difference, right? So I don't chart on the 5 minute. But like I said, I'm not a scalper. So it's all about that. I scalp on the 15 minute. Oh, you wow. I don't even know how that's possible, but you wow. Yeah, so not to go too much into detail, because I didn't want this to turn into a strategy class. It's more like risk management. But I'm not taking a trade unless I like something on the bigger time frames. I don't care what it is. Day trade, scalp, whatever I trade. If I don't like something on a bigger time frame, I'm not taking the trade. And that's just how I am. Like if the bigger time frame has to be my best friend while I'm in the trade. So like we took Amazon today. I took this off the daily. I literally took this off the daily. I like the daily. If I don't like the daily, I don't. No trade that I've ever told you guys to get in has, like, I've always liked something on the bigger time frame. I have never told you guys to take a trade and I didn't like the daily time frame. And that's just how I like. How many confirmations you look for? I'm so glad you asked this. I'm so glad. I am so glad. So when it comes to confirmations, right? For me, I just need enough to say get into the trade. So maybe I need 2 confirmations, maybe 3, but there's a such thing as waiting for too many confirmations, because guess what? You busy waiting for all these confirmations and the trade and just started running already in your direction that you already was waiting on the confirmations for. And this is why I tell people, let's say somebody said, what do I tell people, guys, when it comes to trading, waiting for confirmations? What do I tell people, guys? What do I tell people to do when people that wait for too many confirmations? There you go. I didn't say take the you got to add the word in there so they know. Let's see. Come on. Y'all been with me for 3 months and y'all still can't say what I said? No. There you go. Take the damn trade. Literally take the damn trade. I'm not trying to be funny right now. People wait on too many confirmations. Take the damn trade. You sitting around, it already ran. I get this so many times. Like, how many of you guys have actually seen the trade? You didn't charted it and everything, and you get ready to take it, but you just scared to take it because you just waiting for that confirmation and it had already done ran because you was waiting for too many confirmations and you didn't want to pull the trigger, right? Take the damn trade. If you lose, you lose. Take the trade, guys. Put this in your mind. Like, listen, like Jay told me to take the damn trade, so I'm gonna take the damn trade. That is what we do it. That's how we do it. We just take the trade. I don't do, and that's one thing, and that comes with experience. Like, yeah, Brandon today, CVX went 160%. I didn't signal it because I had to take a shower, but he just took the damn trade, right? Just take it. You don't have to wait for all those confirmations. Now, somebody asked me, what is a trigger puller? It depends on what type of trade I'm taking. So I can't tell you like, oh, it's this exact thing that's telling me to take the trade. You know what I mean? I'm literally just like, okay, let's go over let's go over the trade of the week, right? NDX, right? I'm finna literally tell you my whole mindset behind this trade, right? So, all right, so NDX. This is exactly what I'm sending my trading desk, right? I'm looking at some of the trade and, I always trade XPX. And I was like, what, let me look at the NASDAQ version of XPX. So I looked at NDX and at the time I'm looking, none of this was here yet. None of this was here. I had maybe a little bitty doji right here. And I drew this and I'm like, it's a bear flag. And that's when I sent you a picture showing you guys that it's a bear flag, right? Yeah, this is the India, this is the futures. So, and I sent you guys the picture. You know, you can go back if you want proof, you can go back, right? And, you know, I seen that it was a bear flag, you know, it was a little doji right here. And I mean, it was right at the 21 EMA. And I mean, what else did I need? I'm like, it's a bear flag. It's right at the 21 EMA. Stop losses if it closes above that. I mean, take the trade. I take the trade. That's literally what I did. Take the damn trade. I did not come down and second guess it. You know, I didn't go on Twitter to find out if somebody was going to be in it with me. I didn't do all. I took the trade. If I lose, I lose, right? I know where my stop loss is before I get into the trade. At that moment, you know, we rejected this orange EMA. That's my 21 EMA. You know, we had a dead cross here. If you wanted some confirmation that we were bearish, we had a dead cross here. You know, but other than that, you know, we entered right here. We literally, if you go back to the chat, we entered right here. You know, and if it closes above, it closes above. It closes above. What am I gonna cry about it? The setup, I like the setup. You know, what else more do you need? You gonna wait till they get all the way down here, and when they break that low, you gonna take it? I mean, you can if you want to in this favor that it worked out, but you know, people just wait for too many confirmations. Take the trade. Contracts were over. So when I signaled this, the contracts was when I first, because I ain't gonna lie to you guys, this was my first time trading it. So I had signaled it and I thought I signaled it to Blueprint, but I signaled it to the Minties first. And it was the contracts was 970 per contract. And then I took the trade about here. I was up 100%. You know, at that time I wasn't gonna chase it. And so I was waiting for it. I had already took it. So by the time it got here, I was already up 100%. So then as we actually broke, I just said, okay, guys, now let's just take the trade. You know, I signaled to you guys and we still just wrote it down, right? So, you know, it is what it is. But overall, you know, I just took the trade. You know, a lot of people wait for, like I said, you wait for too many confirmations. Just take it. And my stop loss is right above, you know, risk management right there. I know where my stop loss is, you know, and I'm just taking it. So for you, this would have waited while days candles exit or you enter. So for this, would you have waited? No. So all right, I know y'all finna, because a lot of y'all, like I said, a lot of people don't know how I trade and like my type of strategy. No, I didn't wait for the next day. I took this on that daily candle. Like I took the daily candle. I didn't come to the hourly to take it. I took this candle. Like I came to the daily. I seen it. I just took it on the daily. No, I didn't go to no 5-minute. I ain't go to no 15-minute. I'm on the daily. Sometimes you guys will see I will take a trade off the daily, a day trade off the daily. I know that sounds crazy right now for you guys, but yeah, that's a little secret for you guys. But yeah, I took it off the daily. And you know, if the daily candle would just come back above, right? You know, I took it and I was able to hold the trade. I blocked out the noise. That's why I took it. Now, I did say it would potentially be a swing, though. I did say that because it's on the daily time frame. Obviously, it was supposed to be a swing. I wish we would have swung it because these contracts went crazy. I think these contracts went like an extra 1,000% today, maybe a little more. So should have swung it, but you know, we was already up. I was up pretty good, so I just took profits. Contracts increase percentage such as $1 contracts. No, take no contract. If the contract has one volume, no, do not take that contract. You would have waited and you would have waited on the close on the. So, okay, this one is a little different. And I'm going to show y'all an example on kind of how I did it. Now, like you guys, you can obviously wait for this Terry, nothing closed above, but you could have did a 15-minute candle close above because obviously if you're on the bigger time frame, guys, you don't want to wait for a 5-minute candle to close above. You know what I mean? So you don't want to wait for a 5-minute candle to close above because it's a bigger time frame. So you kind of want to give it some room. So like I say, like if you swinging something or you trading something from a daily time frame, you know, if you want to have a little tighter stop loss, you can wait for like a 15-minute to close above your level that you want to cut at. and then that's a little safer. Yeah, the loss might be a little bigger, but I mean, you know, it sucks to get shooken out of something, you know, just off the daily time frame because you were in the 5 minutes. So, you know, also let's normalize, you know, cutting losses and re-entering the play, because just because you know, you let's say that you got into a trade and it didn't go your way right at your entry, and most people when that happens they just say F the play. You know, they just like, I don't want it no more. You did all that work and now you're just done with the stock because, you know, your entry probably was bad. You know, let's normalize. You can always cut a trade and get back in. Now, if you got a small account and you use your buying power, you can't do it again. I mean, that's different. But I mean, let's normalize that. Let's normalize cutting and getting back in, right? Let's normalize that. You did all that work. You know, the play is still valid. You just got a bad entry. But yeah, the risk reward. That's why I'm a risk reward trader. I'm only taking trades with high risk reward. Only, only. My stop loss is literally right above. I took it right up here. Stop loss right above. Boom. That all I got all this room all the way down here. So I'm a risk reward trader. I'm only taking trades that give me high returns. That's why when you tell me, when y'all guys be telling me stuff on the 5 minute, I don't care. To me, the risk reward does not matter to me. Why am I about to put? And it's just me personally. I know, you know, I know not all y'all been with me for a minute, but to me, I'm just telling y'all how I think. Why would I put my money into something that ain't gonna net me a nice return? Like, yeah, I understand, you know, scalping, you know, getting those 5% profits or 10%, 20% and compounding those gains. But to me, I just think like this is my mindset on how I trade. If I'm gonna put my money if I'm gonna put some risk on the line, I need a return. I don't want no 7% return. I don't want that. To me, if I'm finna put 20K in something, I want the 100. That's just like how I trade. That's how I structure my trading, you know, and that's literally how I trade. You know, not every trade will go 100%, but that's just if I'm gonna put my money in it, the risk reward damn right better be showing me 100%. I want to make sure that my money, if I'm going to risk it, because people don't understand this. You put 20K in on a 5 minute time frame versus a 1 hour time frame, it's still the same 20K regardless. It's still the same 20K. It ain't gonna make no difference. It ain't gonna make no difference what type of trade you doing. You putting 20K in a scalp or 20K in a day trade, there's no difference on the risk. There's no difference. So why not put it into something that's actually gonna net you a little more money? Now, I'm not bashing any other trading strategies. I'm not. I'm just telling you where I'm coming from, where I like. If I'm gonna put my money into something, I want a higher return. That's just how I look at it, right? If I'm gonna put 20K in it, I want 100. So let me show you an example of what I'm talking about, though, right? So let's go to the 5 minute. So right here, it's a good example. So you know, we on the 5 minute before it happened. Let's just say that I'm not making my levels right now, but this most likely was a level. So let's say that, you know, come on, mouse, bro, don't do this because you're gonna end up like the other one. So all right, so let's say you took this bear flag on the 5 minute, right? Just say you took this bear flag, took the bear flag, you know, you took the bear flag break maybe here, or even if you did my type of style, you took it up here, wrote it down. Anyway, let's just say you took the break, right? This is what scalpers do. And I'm not, like I said, I'm not bashing those scalpers. I'm just trying to show you the way I look at it. So you took the break here, you know, it broke here. We went from 13,673 to 13, hold on, guys. We went from, so let me do the math real quick, you know. This is not a good example. Hold on. This is not a good example. Hold on. Let me go to QQQ because these numbers are just making my head hurt right now. These numbers making my head hurt. All right, let's go back to the same thing. I don't even know where the bear flag went. Okay, let's just say from right here. No, that's not it. Where did the bear flag go? Oh, here it is. Here it is. Okay, so let's say you took this bear flag break. So you took it from 333 to 330. So a $3 drop, right? That's pretty good for a scalp. But anyways, you took the $3 drop, right? So you put 20K in there, you took the $3 drop, you might be up, depending on what day it was, you might be up maybe, 20%, right? So let's say me, right? I take the break, I'm taking this bear flag, what I did on the daily time frame, right? Ignore all of this right now. I'm taking a break or whatever. I took the break at 341, right? It broke at 341 and we wrote it down to pretty much the same level as you did. So I took it, the same 20K, like I'll make sure I didn't lose nobody. This is where the break at. Let me just draw it for the people that's going to be trolling in a minute. Hold on. Let me just draw it. Sound like Jay, that wasn't. Here we go. All right, so we took the break here. This is the break we seen on the daily time frame. So we took the break here. The break was at 333, 343 or 330, 41 or whatever, however you want to say where you entered it, right? As you can see, it's obviously a bigger drop, right? The same 20K though. So to me, the risk reward was way higher. I literally, it was the difference between a $3 drop or a $13 drop, right? And it didn't even have to be a swing. Let's say we didn't even swing. Let's say we just took the break on the first candle on the bigger time frame, right? We took the break here at 343, and we just wrote it down on that same candle. We got a $11 drop, about $9 to $11 drop. That's what I'm just trying to show you. I'm trying to get you guys to think in terms of risk to reward, right? So on here, same day, just more money, right? And it's still the same 20K. And that is how I like to trade. Like I like to have my risk reward there. I like more risk reward if I'm gonna put my money on the line. That's just how I think. That makes me feel better. Even if I lose a trade, knowing that my risk reward was so high that I lost this trade, but my 20K, that drop right there, you up 200%. You up 200, 300%, right? The same 20K that you would have put in that $3 scalp. So just thinking like that makes me emotionally ready. Like if I do take a loss, I know that loss that I took was a 300% play if it went my way. So to me, that literally reprograms my mindset when I take trades. And I don't know, this is like kind of like psychology, but that's just how it is. Any original mentees? I'm gonna answer these questions in a minute. So you talking about right here, Morgan? If it would have closed above here, what I had did a call? Yes, I would have. Yep. And actually, what happened was a lot of people did that, right? They didn't see the bear flag. So a lot of people didn't notice the bear flag. They did this, right? I mean, I noticed the bear flag because you have to zoom your charts out. I tell people this all the time. Zoom the charts out, guys, so you can see the bigger picture. This is what people do. They're like, oh man, it's consolidating, man. It's finna blow. Whole time, it was a whole bear flag the whole time, but your charts you tighten your charts up too much. You couldn't even tell that it was a bear flag. It wasn't just a random consolidation, right? That's why I tell people, zoom your charts out. But did that make sense? Is this making sense, or I'm still confusing people? And I'm gonna answer y'all questions in a minute. Dang, time flying. Okay. All right, so let me go back up here. Oh, y'all asking me questions that weird. Yeah, I still have my lines on the daily. Well, y'all asking some crazy questions right now. Okay, hold on. What time frame would you have triggered the stop loss? I would have. So if you swinging now, understand this, guys. If depending on the contracts that you bought, like let's say that I took NDX, right? My stop loss wouldn't be on a daily time frame. Why? Because I have contracts that expired this week, so I cannot take a daily time frame close above, because the contracts, that's a big move for those type of contracts. So like, let's say that I'm in weekly contracts, I want to make my stop loss on a different time frame. I normally go to the 15-minute. You could do whatever time frame you want, but I normally, if I'm on a daily time frame, I'm taking trade out the daily time frame. My stop loss is probably going to be if a candle closes above that invalid area on a 15-minute time frame, if I'm on a daily time frame. Now, if you're a person that like to buy months out, then your stop loss can be on a daily time frame because you bought time, and those contracts won't hurt as bad, right? Understand, if you're trading weeklies, pullbacks hurt. It ain't just in this market. No, in general, weekly contracts hurt. And the reason why weekly contracts hurt is because when you get into that weekly contract, you are literally saying that the stock is going to go my way this week. Like, and if let's say that it's Thursday and you buy in a weekly contract for tomorrow, you literally telling the market, my stock going to do this by tomorrow. So understand that if it doesn't go your way, you're going to lose premium. Because why? Because it's not going your way. People don't want it. People don't believe it, that it's going to go that way. The contracts are not all about the stock price. I keep telling people this. It's not all about the stock price. When it comes to contracts, it's not all about the stock price, guys. It's more than that. It's the demand. It's people. It's investors, right? If I get in, let's just say, just saying, if I was a billionaire or whatever, let's say that I like Nike. I like Nike calls, and me and Isaac both in 130 calls. But let's say that Nike start pulling back. And I'm like, you know what? I don't even want these contracts no more because I don't believe that Nike gonna make the move. So I'm gonna just sell them, right? So now the demand leaves. So now let's say that Nike didn't even move. Let's say that Nike just stayed. Let's say we bought the 130 calls. Nike stayed at 130, but I left the contracts, and I had a decent amount of contracts in it, right? Just because the stock price didn't move, the demand of the contract is not going down. So you're gonna lose premium as well. That's why it does that, right? That's why it does that. It's because when we bind these contracts, the reason why they're priced the way they is because they're priced on what people are willing to pay for them. So you have to understand that. The goal is to buy contracts. Well, for my strategy is to buy contracts that people don't want maybe at that moment, but I'm also, predicting that people will want them eventually. And that's literally how I trade. So when I took NDX, the reason why they went up so much was because I took them when nobody wanted them, and I got in before they did. So not only did the stock price go my way, but now since the stock is dropping, people going to be coming to the charts and be like, oh man, it's dropping. I got to get in. They go run to get in. What is it doing? The demand of that contract is now going up. Think of it as some shoes. If everybody want them shoes, they're not finna be retail no more. They're not finna be retail. Look at the Travis Scott shoes, right? Them shoes I think retail is like 180, but everybody want them. So now the only way you buy them is if you pay 1,800. It's the same way with trading. So the demand, right? It's not only the stock price. Everybody, you guys be like, oh man, the stock price didn't even move and I'm losing premium. Well, it's because the demand is not leaving. People don't believe in it no more, so they don't want it no more. So you got to be mindful of that. So when somebody asked me earlier, can I buy a contract with one volume? I mean, I ain't gonna lie, that if the demand never comes, then it's just the premium is just gonna collapse on you, right? So you want to keep that in mind when you're picking your contracts. The rule of thumb is to pick the contracts with the best volume and the highest open interest. And those contracts are normally going to be the ones that people actually like, the affordable ones, be realistic. I'll be telling people this all the time. Be realistic when you buy your contracts. If you have to go, right? Like when I'm buying if I'm buying these out the money contracts on Tesla or whatever, I'm not buying it because I have to. I'm buying it because I want to, not because I have to. If you have to buy out the money contracts, then you shouldn't be trading that one. You shouldn't be trading. If you can't buy a regular in the money contract, like a regular trader, then that means that stock is just too expensive for your account right now, which is fine. You will get there. Everybody don't start off trading Tesla and Amazon. You have to realize this. Everybody want to get in these trades. And then what happens is they try to get in these stocks. They have to buy out the money. So now when the stock doesn't go their way, what happens? The demand loses. and now they're taking a bigger loss, right? They couldn't afford the stock in the first place. So now that it's going against them and taking a bigger loss, this is why a lot of people blow their accounts on Tesla and Amazon. I'm pretty sure if you would buy in the money contracts, you actually wouldn't be blowing your account on them because you bought the right contracts. So just keep that in mind when you're trading. These questions. Justin, DM me. We'll see about it. So how much time do you usually buy for those larger time frames? Great question. So I'm very realistic with myself. As far as a trader, I know damn well I'm not gonna hold a trade longer than 2 days. I just know that. I mean, I will try sometimes, but I'm just not the type of person to be able to hold a trade that long. So normally I give myself, I buy a week out. Maybe if it's Thursday or Friday and the contract's moving kind of weird, I buy the next week. But I just know myself that I'm not mentally there to hold a trade longer than 2 days, just the way I trade, right? Because the way I trade, since I'm buying, when nobody else is buying, by the time it does go my way, I'm already up 100 some percent, right? So I don't really have to hold the trade any much longer. Like, yeah, I would have loved to hold, QQQ all the way down to its targets. The first time we sold up here, I would have loved to hold it. But I mean, honestly, at this point, I'm up 500%. So I mean, it's really no point for me to really keep holding. I could have, but that's just the way I trade. I know I can't hold a trade that long. And that's just me. I'm a day trader at heart. So if you're a person like that, then you need to, understand it. But understand that when you buy weekly contracts, you have to really have the risk management for that, right? You have to know when to cut, when not to cut. You just have to really focus on those. So I hope I answered that. Choose where you think the stock will go. Yeah. And this is a little free game for you guys. If you still have trouble picking the right contracts based off of the volume of open interest, pick the stock price, pick the contract that you think that the stock is going to go to. Like, even if those don't have the best open interest in volume, at least if the stock is going to that number, you're more likely to make a profit. Like, don't overcomplicate picking contracts. You can pick the one you go to. And this also helps you from, buying too far out, that kind of helps. So like if you in QQQ, and the current stock price is 335 and you think it's going to 322. Oh, let's use a bigger number, a whole number so nobody get confused. QQQ is at 330, at 325, and you think it's going to go to 320. Why are you buying the $250 puts? You know what I mean? Like, and I see this too many times. They're like, oh, Jay, it's cheaper. I'm like, okay, you bought a weekly contract and you think that QQQ about to drop anywhere near that to make that contract profitable. And then if it pulls back, that contract definitely is done, right? So you got to kind of think like that. Like, yeah, it'll move, baby. But if it pull, you have to really, I don't think people buy and understand that stocks do pull back to go your way, right? If you're in calls, a stock can pull back just to go higher. If you're in puts, a stock can pull back the opposite direction just to go lower. I don't think people put that into account when they do stuff like that. Because if you buy far out the money, don't get me wrong, Tesla and Amazon are a little different, right? These are a little different. I mean, you still can go too far out with them as well. But like that's kind of the best way to think about it. You know it's not about to go to 250. So why are you buying that one? It's Thursday. Why are you buying the 250 puts if the stock price is at 325? You think that QQQ about to drop $60 in one day, right? So I'm telling you, it's common sense, right? It's like a common sense thing. You gotta really, like, when it comes to trading, keep it simple. It's common sense. I'm having trouble with support and resistance. Not confident in my levels. Can you do it quick? I ain't gonna lie, that would kind of take a minute. So the best way to do support and resistance is look for levels, that have the most touches. That's the best way. And, just practice. A lot of people don't practice support and resistance. Ignore these levels, guys. Some of these be coming from levels that I make throughout. First of all, if their levels are not red, that means they're old. So anyways, I'll have to redo them because I don't trade QQQ. So these are old levels. But I mean the gold levels. If you see gold levels, they're old. The red ones are the new ones. But overall, And the reason why I'm saying that you want to like practice it is because you want to get used to it, right? So NDX, right? You have to practice it to see your levels hit. You have to actually watch it. You might not even take the trade, but as it comes, you can just practice it, right? Start from the daily time frame. Everybody want to make levels on a 5 minute. No, start from the daily time frame. Look at where it makes the most sense, right? Plot these wicks, right? We got that wick right there. Let's plot that, right? It was a touch here, touch there, touch here, and a touch here, right? And it also your support to make accurate levels, very good levels, because some of y'all don't make good levels. If you want to make good levels, you want to see those levels that you made become a resistance at some point. So like, let's say you make a support, you want to see that level become a resistance. So let's look at that same level that we just looked at. So if we know of support here, support here, support here, and support here. So now look, it was resistance here, resistance there, and resistance there. Hold on. There. So that's how you make stronger levels that actually are accurate. And then you just do that like over the weekend, just keep practicing. And it'll get better. It'll get better. You just got to practice it. You're not going to know it overnight. What stocks do you recommend for $200 accounts? It all depends on, you got AT&T, you got AAL, you got Plug Power, Neo, it all just depends. But I will stick to those smaller companies. But if you had a $200 account, I would say stick to smaller companies, but not those weird stocks, right? So I would stick to like, AMD, Apple is a good one, Microsoft, stuff like that. What are your RSI volume doing during this trade? I don't use no indicators. The only thing that I'm using is, if I am using the indicator, I'm using my EMAs. I don't use RSI. I don't use none of that other stuff. Too many indicators that's noise. I'm literally the trader that blocks out noise. I don't indicators. I've literally deleted them out of my stuff. The only time I use a MACD is for a weekly squeeze or something like that. But other than that, I'm strictly price action, right? I'm not a big fan of indicators. Original, I'm not sure. But if the candle changes from red, but what if the candle changes from red to green? That's fine. You're gonna have candles that change from red to green. If the reason why you got in is invalid and you just cut it, the candle can be red or green. I'm not looking at the color. I'm actually, when it comes to trading, I don't look at the color of the candle. I don't care what the color is. The color literally has I can make these white, all white candles. This price action is still going to be there. If it's a bear flag, it's a bear flag, regardless what candles are in it. Do you use previous days charting on a 15-minute hourly and pre-market? Yes. Yep, I use previous days. Yep, that's how you make your levels. Yep, I use previous days. I really like using previous days highs and lows. A quick little easy strategy for you. Take puts under the previous day's highs. Take puts under the previous day's lows and take calls over the previous day's highs. It's a little easy little day trading strategy if you want to use that. So how much time would you usually buy? Oh, I already answered that. Yep, Nike burnt me. Yep, it did. Burnt me too. Then I ended up getting it back. Does it make sense to get a SPY contract? Yeah, if you want to. Yeah, you can get as far as out you want. Just know the further you go out, the less profits. The shorter you go, the more profits, but the bigger the loss. So, like I said, anything that's good in trading, it always has a con to it. You buy month out contracts or whatever, the profit is smaller, but the losses are smaller. You don't really take a big loss. But you buy a weekly contract, the profits are bigger, but the losses are bigger. So it has its pros and cons. Why not leave runners? The reason why I didn't leave runners on NDX is because the runners were $6,000. So that's Yeah, I'm not leaving the $6,000 runner. So yeah, I'm taking that every time. I'm not leaving the $6,000 runner. That's wild. I don't know anybody that's gonna leave that. I'm taking that. I reload or something. I ain't leaving no $6,000 runner. Also, yeah, while we're on here, when you guys leave runners, you have to understand, you have to fully accept the fact that your runners can go to zero. Like, obviously, we don't want them to go to zero, but a lot of you guys leave runners that you actually care about, right? Like, once I say I'm leaving a runner, at this point, I don't care if the runner go to zero, right? I literally don't care. Like, you have to think in your mind, like, if this runner reverses and flip do all that, will I care? Some of you guys don't know how to properly leave runners, right? If you leave a runner, you have to understand it is a runner. The whole purpose of a runner is to chase profits. If it pulls back, then that's fine, right? We obviously can manage runners, right? We can manage them to where we don't lose all our money, but you have to still do that, because I've had people where, they were upset about a runner. And I'm like, well, then it wasn't a runner. That was still your play. Like, that was your position. You already counted that as your money. You can't do that. You cannot count any gain until you actually sell the play and lock the money in. So if you have a runner and you see maybe with the runner, you were up 10K, and now you take $8,000 in profit and you got 2,000 left running, you have to literally set your mindset up to where, okay, this 2,000 can go to zero. If push comes to shove, it can go to zero. If you can't do that, then you need to sell. You need to take your money. It's your money. So that's why I don't leave runners on NDX. $6,000. Hell no, that's my rent for like 3 months, right? And about 2.5. But yeah, so I'm not leaving that. Crazy. Yep. I'm a day trader, so I do. Whole numbers are important as well. Yep. Since you enter based on anticipation, which I like, how are you avoiding potential profit being ate up by pullbacks? It all comes to the time frame. So, a lot of people hate pullbacks. Isaac is one of them. I'm not down in nothing like that, but you have to understand that pullbacks happen. Y'all know what I mean? Like, pullbacks happen. It's part of the game. Nothing goes in a straight line. Nothing goes, nothing. That's not how it works, right? So by me being an anticipated trader, I'm just going to let the play its course, right? I'm listening to the charts, right? The charts telling me that it's going down. No, I'm not letting no pullbacks phase me, right? It happens. Pullbacks happen. You got to understand that. Understand that stocks can pull back to go further down. Like, people don't really understand that part, which is, it really makes me mad, because I get this every time. Every time we in a trade, guys, I mean, every single time we get the pulling back and people just get just upset and just crying. I'm just like, guys, it has to pull back to go lower. It has to pull back. Look at all these pullbacks. What did it do every single time it pulled back? Every time, pull back. It just kept going lower. You have to program your mind to understand this. Look at this whole tire move. Boom, pull back, pull back, pull back, pull back, pull back, pull back, pull back. Literally, like, you have to have pullbacks to keep going in your direction. You want to have healthy pullbacks. Only if I use VWAP is for scalping only. VWAP is for scalping, not for anything else. Yeah, I'm finna show y'all these risk management slides, and then I'm gonna let y'all go. Can I start trading with $300? Yes, you can. Accepting any new mentees? Not right now. I'll let you guys know. Trailing stop. You can have trailing stops if you want to. You use anticipation strategy and get in before the break on every chart pattern. No, it depends on the stock. It depends on the stock, the situation. If I do get into a chart pattern, I'm either going to get in before the break or the retest. So, like, if we break out, I don't like breakouts. If I didn't make that clear, I hate breakouts. Either I'm in before it breaks out or I'm waiting for the retest. You know what I mean? So, like, right here, let's say I were to take this trade. This is a bear flag. If I wasn't in right before it broke out, I'm not taking it. I'm entering here on this retest. I'm a retest trader. I'd rather take it here. I'd rather wait for it to retest an IEMA and then write it down. That's just how I am, right? Hold on. So that's just how I am. I'd rather take the retest if I don't catch the breakout before it breaks out. Now, and like I said, this is not for everybody. That type of trading is not for everybody. You got to kind of understand like your risk management or whatever, but it's not for everybody. I apply how easily you pick patterns and charts. You mentioned that we should zoom out in order to see these patterns. By zoom out, you mean, yeah, make the chart bigger. Look at the bigger picture first. And people always ask me, Jay, how you're able to identify chart patterns so quickly. Practice. It's no secret. It's no secret. TradingView, my mentee's been showing me some crazy stuff. I guess TradingView does everything for you. That's fine. But no, it's just practice. Just I get on Google if I think I see something. If I think I see a head and shoulders, I still do this to this day. If I think I see a head and shoulders, I'm going on Google to look at other pictures of head and shoulders. If I think I see a bear flag, I'm going on Google to see if I can see other pictures of bear flags and kind of see if, I think this looks exactly the same, right? And I'll do the same thing. And you just pick it up with time. With time and just practice, you just get better at it to identify them quick, right? I've got to a point now, and I started in the beginning, I sucked at chart patterns. And I only could draw triangles because that seemed like that was the only ones that showed the most to me. Then I, finally started practicing, and I got to a point where like now, people can see me a chart and I can identify it that quick, right? It's all about training your eyes to see it. My EMAs is the 9 EMA and the 21 EMA. These are the EMAs that I use on a daily basis. I don't really even use the 200 as much, maybe if I'm swing trading, but normally I'm only using the 21 and a 9 EMA. How do you tell the difference between a pullback or reversal? So it depends, right? With healthy trends, right? With healthy trends, and I'm not gonna lie, I'm gonna probably for something like that, I'm gonna probably have to do like another free class with you guys. But it's all about higher highs and higher lows, lower highs, identifying the trend. If you want to, I can't do all that in one class. You go on YouTube and just type in, higher highs and higher lows, and then just practice that, because if a stock is just making higher highs and higher lows, then it's in the uptrend, and the uptrend is basically, it's just a pullback, but if we break one of those higher lows, then, that's how we know it's actually reversal. So that's some homework for you guys, go look up higher highs and higher lows. Nope, you cannot. You cannot lose a trade. So next question, can you lose on a trade going in your direction with too many pullbacks? No, as long as the stock is making healthy. So in this trade, let's say that we took NDX from this top and we just wrote it down. This were a lot of pullbacks, but you can't really lose it. The problem is y'all hold trades that actually be reversing and it's not a pullback, right? It might actually break some type of higher high or higher low or lower high, lower low. And you think that it's still going down, but it actually reversed and it just happened to go down, right? That means the trend is now broke. It's an ugly trend. You shouldn't be in the trade in the first place. You know what I mean? So, that's something. Just look up higher highs and higher lows and, practice that all weekend. And you will kind of see what I'm talking about. And if I have to do like another free class or something, I'm willing to do that. But just you guys have to do some homework yourself as well, right? You want to learn how to trade. You want to do some homework. It's all about market structure. Will there be a pre-recorded video? This is recorded. All right, so let me go right here. So let me go ahead to go to this next slide real quick, and then I'm gonna let you guys go. So let's go back. I hope that made sense. All right, so why do traders fail? Right? Traders fail for these reasons. They have no risk management. They have no trading plan. You guys have to get a trading plan. You have to have a plan, right? You want to know when you're getting in, when you're getting out, What's your strategy? You know, I got too many wannabe scalpers. This is why I have too many people of. I have too many people that want gains. I mean, quick gains like a scalper, profits like a swing trader, but less stress like a day trader. You can't do that. You got to find your strategy. You got to find what type of trader you want to be, and you want to focus on that. Y'all want to be all of them you can't, bro. You can't be all of them. You can know how to do all of them, but you got to pick what you're actually going to go with, right? For me, I know that I don't like being a scalper anymore. I know that. So people be like, well, Jay, what if the market, and I love people ask me this. I love this. Jay, but what if the market not showing me a day trade opportunity and I see all scalping, but I'm not a scalper? Then you don't need to trade that day. Your strategy is not right now for the market. You don't get to trade. You don't get to trade. It's not a trading day. Every day is not a trading day. I tell the people this all the time. If you're a swing trader and the market is not looking like you can swing, then you just, okay, go do something. Go find a hobby. Go do something. If I'm a day trader and the market not day trading, okay, time for me to get off the charts. Go find something else to do. You can't be all of them at the same time, y'all. You can't be. You cannot be. And I see this too many times. I tell y'all I'm in a swing. Yo, Jay, this and that, it is down. Is this? I'm like, damn, you want profits like a scalper now. Like you in the wrong trade, buddy. You in the wrong trade. You need to be over there with the scalpers then. So y'all got to realize what kind of trader you want to be. So next, no trading strategy. That kind of go with the plan, right? Big losses, right? That's the whole point of risk management. Big losses. This is a great one. This is a great one right there. Trading from predictions and opinions. This is number one. This is key. Everybody want to predict where the market going. Everybody got a crystal ball in their closet and they take it out to predict where the market going. They got opinions. Every single person. They got so many opinions on what the market's supposed to do because they was on Twitter looking at the people on Twitter talking about it's going to go somewhere, which I would never understand why y'all do this. Why do you care what somebody on Twitter say when 90% of traders are not profitable? Make that make sense. If the majority is telling you something, why are you doing it? Why are you going off of that? Why are you in Webull comments? Why are you in Webull comments? Why are you in Webull comments looking for where it's going to go? I actually have a friend, Keith. I'm going to put him out. I don't care if he's on this class. I never forget when Keith first started trading, he was like, man, they all on Webull talking about us finna do this. He went ahead and put a little 2,000 in there. He put that little 2,000 in that trade. Oh, man. I mean, and he looking at me. I'm like, that's what you get. That's exactly what you get. That is exactly what you get. Exactly what you get. He was so mad. He like, I ain't never doing that again. And I'm like, bro, you got to understand, 90% of traders are not profitable. So why the hell is you on Webull comments? First of all, I'm going to be honest with you. I'll be on the Webull comments trolling, if we're being honest. So if I fire you, I wouldn't take nothing on there. I'll be trolling. So you just falling for the trap. So if we being honest, I'll be on there trolling. Be talking all stuff. I literally go on there. I say that I stop doing something. I'll be just going back and forth with somebody. When I'm bored, I don't really do it no more. But I used to. I'll be on there trolling. But yeah, like he lost 2,000 doing that. He lost 2,000 doing that. That's what I'm saying. Why are y'all on it? So next is, this is a good one. Watching their P&L, not the charts. Everybody want to watch their money and understand why they can't hold a trade longer. Why is this? Because when you're trading, you're supposed to be looking at the charts. Why are you looking at your money? I don't care how much money that you're up or down. Focus on the charts. Focus on the money after you sell. Literally, Isaac could tell you, when our first time ever trading together, that's something that he picked up from me. The whole time we was in the trade, right? He literally said it, Jay, you never not once even seen how much you up. Kept asking me, he sitting right next to me, Jay, how much you up? Jay, how much you up? I don't know. I'm on the charts. I don't know how much I'm up. When the charts tell me to sell, I'm gonna sell. Oh wow, I'm up 20K. Right? That's how. Don't look when you're looking at your money. I promise you're gonna get shaken out every time because you're looking at your money. You watching that P&L, right? Trust your charts. Watch the charts. Leave the P&L alone. I don't even have P&L up when I'm trading. I literally don't have it up. I literally don't know. Now I might glance at it or whatever, but you want to get into a habit of not looking at your P&L while you're trading, right? And I promise you, right off of there, when you start doing that, I promise you you're gonna start winning more. I can literally 100% guarantee that you just from changing that one thing about you, you will be a little more profitable. I ain't saying that's the key, but you will be a little more profitable than you were yesterday if you start trading off the charts and not your P&L. Next, emotions. Trading is an emotional game. Let's be real. How many of you can grow a paper trading account? But as soon as you a millionaire in your paper trading account, but as soon as you put your real money in, oh man, it's all bad. It's all bad. It is all bad. What do you think that is? Like it's emotions, right? Or your Robinhood watch list. You know, Robinhood got the little thing to where now you can put your watch list up there, and it kind of like paper trading if you want to save. And you see that up 1,000%. You're like, damn, it's always, I literally have people say this. It's always the paper trades. It's always the paper trades that always go. If I just took the paper trades, you want to know why that is? I ain't gonna lie, mine do too. My watch list be doing numbers. I'm a millionaire on my watch list. But it's the emotions, guys. It's all emotions. That's all it is. That's literally all it is. It's just your emotions while you're in these trades. That's all it is. So you have to understand and control your emotions. I want you guys, and it's crazy that Isaac was reading it today. I want you guys to read Trade in the Zone. I got the PDF. I can send it to you guys. I want you to read that. Get your emotions together. Now, I'm just being honest with you guys. When I say I'm studying, remember in the beginning when I told you I'm studying, I was studying trading, right? I was studying charts. Now, I don't even study charts. I literally don't study charts. I know how to chart, right? Charting ain't, most of you guys know how to chart. You know the charts. You just don't got your emotions in check, so you can't grow your account. What I want you guys to do this weekend is to retrade in the zone or watch videos on YouTube or whatever, get your emotions together. You can't chart your way to the riches. Chill. This they talk about my mouse. First of all, let me tell you something. What me and my mouse do behind closed doors ain't got nothing to do with child, right? So, but I ain't say my emotions was perfect now. I ain't say my emotions was perfect. I have my moments now. I have my moments. Like I said, trading gonna be an emotional game, guys, for the rest of your life. And ain't nothing. Hey, you ain't gonna wake up one morning and the emotions is just gone. This is an endless battle. So that's my way to take it out on the market. I break my computer mouse, right? I just throw it. So, that's just how it is. How's your kids been trading? Yeah, I'll make sure I do it by myself. I didn't definitely. I can see y'all some pictures now. I definitely didn't put some scratches in the wall for throwing these damn mouse. I got $100 mouse now, so I'm gonna be more hesitant to throw this one. It'd be the little $14 ones that I just throwing. But hey, any company that sell mouses, they're not never going out of business because they got me. So keep it in mind. And then stressful trading. And that's why with stressful trading, this just comes to the stressful trading. This comes to, what type of trader you are. If your trading is like stressful, yes, trading is stressful. But if it's just for some reason you just stress the hell out because of trading, I'm not gonna lie, it's probably the strategy that you're using. It's probably like the type of trader that you're trying to be. It might not be the best trading for your emotions, right? If you are so stressed out every time that you trade, maybe the trading strategy that you're going for is just too stressful for your mind, right? For me, I'm not gonna lie, scalping put too much stress on me. It did. Like I was just too stressed out. My emotions were really taking over when I scalped. So when I started switching to like longer day trades, oh man, I'm chill. Like I can actually have a life outside of trading. like back then when I was scalping, if I had a bad day in the market, I was already so stressed out. I didn't want to deal with nobody. I literally I just was so done. I was literally so done. I just wanted to sleep. I couldn't take it, right? I literally could not have a life outside of trading because of the damn strategy was stressing me the hell out. And I had to figure out I'm not a scalper. You have to be realistic with yourself. If you're trading right now and you're just stressed the hell out, you're probably trying to be the wrong trader. So I hope that made some sense. So how do we fix it, right? Becoming a profitable trader isn't as hard as everyone thinks. You already know that though, it's emotions. You just need to find a trading plan that generates bigger winners and smaller losers. The trading plan that I have, that's what it does. It generates bigger winners and smaller losers. Once you achieve this, you will be on the path to reaching your trading goals, right? So make sure that y'all put that down. This weekend, I want you guys to focus on finding your own trading plan that generates bigger winners and smaller losers. That is the whole goal. Remember how I said that. I didn't say create a trading plan where you're going to win all of your trades. No, create a trading plan that has bigger winners, smaller losers. Everyone think that the win percentage is the most important, but that's false, right? With the right trading plan, it should kill. I said the same thing. Literally, that's kind of what I just said. So that's all it is, man. It ain't the plan. It's me following the plan. That as well, if you have a trading plan that generates bigger winners and smaller losers, and you just not execute it, then you should just execute it, right? You just execute it, right? You just execute. That's all you're doing. You just have to be more disciplined. Focus on discipline. Start watching stuff that's disciplined. Start watching discipline videos. When I'm studying now, like I said, I'm not studying charts. I'm studying, how to deal under stress. I'm studying how to be more disciplined with myself. That's with anything in life. How to be consistent. Those are the things I'm studying now. I'm not studying charts anymore. I'm to a point, I know the charts. I know what a bear flag is. I know what a bull flag is. I know what the problem is. The problem is my mindset. Once I get that right, it's going to generate me more money. Your articles. Yeah, I'm a similar. I got y'all. I'm about to actually be traveling in a minute. So I'll go ahead and send y'all some gems, the articles that I be reading. Right now I'm in this little phase where I'm watching fighter jets, how do fighter pilots deal with being under stress, because they're flying an airplane or whatever, and there are people trying to kill them, how are they dealing with stress, right? So that's kind of how I'm like learning, how to deal with stress and just being under pressure. So, that's things that I'm studying. And also, I'm gonna get y'all on this one. Stop saying profit is profit. This is not a winning trading plan. This is facts. Profit, when people say, profit is profit, that's not really the case, right? Because there is a such thing as cutting a winning trade too early. That's a such thing. Yes, you integrate on the trade, but honestly, like long-term wise, like being long-term, if you cutting it, like you're just missing a lot of opportunity costs, and just the risk to reward is just not making sense. And then in the long run, you're gonna end up blowing your account. I'm just being honest. And I get the most backlash when I say that. I do, honestly. And I get it from a lot of other traders, right? But telling people profit is profit is not, that's not it. That's not it. If you get into that trade, you want to understand that you're not getting into that trade to see a number, guys. You're getting in that trade to see your charts go in the direction you said it was going to go. That is a trader. You're getting in the charts. You're getting in this trade to say where the chart is going to go, right? You're getting into that. You're getting into that. You're getting into that trade. You wanted to see hit your targets. You want to do that. As a trader, long term, there's a such thing as cutting winners too early. The whole goal is to let winners run, cut losers short. There's a real thing. There's a reason why I did not sell SPY. I trust in my charts. I am trading my charts. I did not cut SPY for 20%. I cut SPY for 1,000% this morning. Why? Because I trust in my charts. Small accounts, you have to understand this. Let winners run, cut losers short. You have to and I'm not talking about no runners. I hate when people tell y'all that. I get the most backlash on this, but you see it's a difference, right? How many times have you cut a trade too early and just see it go your way? After you said it was going to go your way. You literally said it was going to go there, and You took profit early because you was looking at the dollar amount and just to see it go your way. You have to understand that. I'm gonna hold a trade until it gets to where I want it to go. Right. And I mean, don't get me wrong, sometimes you want to take profits, but there's a such thing as cutting profits too early. You didn't did all that work, man. Get paid for your work. Get paid for your work. You did all that work. You did all that charting. You on a daily time frame. You did all that charting. You looking at this pattern or whatever. You saying the stock is going to get here. Get paid for your work. Get paid for your work, right? Get paid for your work. You didn't chart that to be a 20% play. Get paid for your work, right? And it's not all about having diamond hands. It's literally just getting paid for your work, guys. This is our job, right? Get paid for it. Cutting the losses short is the key for me. Been holding them. Yeah, you gotta understand, guys. If you're steady holding losers, it's going to get bad. It's going to get bad, right? Cut them and just move on, right? That's part of the game. You're trying to protect your capital. Actually, and I tell my mentee this all the time. For me, when I cut a loss, I actually feel good. I ain't gonna lie, I don't know about y'all, but I feel a huge sign of relief. Like, that's over. Right? That's just, I don't know if y'all feel that way, but sometimes I just like cutting. I'm like, oh man, thank you. That is over. Yeah, it's a relief. Like, it's out of here. It's like having like a little toxic egg. You just out. Like, finally, she gone. She gone. She gone. I'm free. You know what I'm saying? It's a sign of relief. I'll tell y'all, don't be trying to make no assumptions, but I have did that before. I'm like, hey, you want to leave? I'm glad you are doing the world a favor right now. So, but yeah, so, I'm probably gonna try something like, why are you like this? I'm probably try something like, well, all right, guys, I have to go. I have a long trip, and I'm kind of late. So, okay, yeah, they just texted me. They said, come on, they finna come over. No, I'm not going to. I'm gonna be in Hawaii, June something. I'm gonna be in Washington D.C. So for my people that's in the DMV, was good. I'm gonna see y'all this weekend. And all right, guys. Am I live trading tomorrow? You can live trade tomorrow. Well, all right, guys. I'm gonna probably do some more like this. But I'm gonna send y'all some stuff tonight while I'm in the car. But I'm gonna go ahead and let you guys go. And we can do more like this. But all right. And I'm gonna drop that PDF. I got you. How you cancel this? Okay, here it is.